Hello everyone. Today we will talk about the need to invest. Why should you start investing right now? First, let's see what investing is. Investing is the process of allocating funds to financial schemes, shares, property, or a commercial venture with the expectation of gaining additional income or profit. This is the basic definition of investing. You make the money work for you. You put it into schemes or shares or mutual funds, and it'll you will gain money through the process of interest, and you can use this for future goals. Now, some people think that investing and saving is the same thing, but it's not. Investing is completely different. Saving is basically you keep aside a little bit of money and then you use it for whatever future goals you have. The money does not gain as much interest as an investment would. Saving is the accumulation of money that is kept aside for future use. Savings do not earn returns the way you save money in a bank account. Now, investment is when you use the money to buy an asset that delivers returns. Your money works to make more money. For example, buying shares, bonds, gold, real estate, or investing in vehicles like mutual funds. Let's just consider one example of gold. Suppose you buy gold for rupees 3000. If you sell this a year later, the value of gold would have increased and you would gain more money if you sell the same amount of gold. Now let's see the reasons for investing. It is important to invest your money because it can consistently earn returns for you. Now here are the following main 4 points for investing. The first one is inflation, the second is tax benefits, third is the financial goals, and fourth is the increasing wealth. Let's see inflation first. Saving is not enough because what you earn from a savings account in the bank will not have as much value after taking inflation into account. Historically speaking, investments have been a way to beat inflation and increase wealth. For example, if you have rupees 50 and you buy a cup of coffee worth rupees 10, with 50 rupees, you can buy 5 cups of coffee. After a few months, they increase the price of the coffee to 12 rupees. Now, with the same 50 rupees, you can only buy 4 cups of coffee. This is how inflation works. It reduces the purchasing power over time. The same 50 rupees, which could get you 5 cups of coffee, will, after a few months, it will get you only 4 cups. By investing money, you can undo the negative impact of inflation. Next are the tax benefits. The government actually grants you immense tax benefits for various investment options. Let's consider one of these. Under Section 80C of the Income Tax Act, you can claim a tax deduction of rupees 1.5 lakhs on your total income by investing in equity linked saving schemes, public provident fund, and national savings certificates, and so on. Money saved is money earned, which you can further invest and gain more returns. Third reason why you should consider investing are the financial goals. Investing can help you achieve your financial goals in life. Suppose you want to pay a down payment for your house or fund your child's education. For such goals, your savings will not be enough to cover all expenses. The interest rate on a savings account is usually around 3.5 to 6%. Compared to the investments in the stock market and mutual funds, you can get a return anywhere from 10% to 15%. By making a combination of investments in stocks, mutual funds, and real estate, you can earn money at a faster rate. You could also consider investing in hedge funds, private equity, and venture capital. Now, the last reason for investing, increasing wealth. It is said that if you put your money to work, you don't need to work for money. When you invest your money in various avenues, you can earn money that you would normally save. The effect of compounding interest comes into play over a long period of time. The returns you earn, in turn, generate their own earnings. For example, Suppose you invest 10,000 rupees every year at an interest of 10% every year. So you start in the first year, you earn an interest of rupees 1,000. Then in the second year, the principal amount becomes 11,000 and the interest becomes 2,100. If we see it continuously this way and it proceeds over time, you might have invested 50,000 over a period of 5 years. But after those 5 years, your 50,000 that you have invested would have become 67,000. That is the power of compounding. And compounded over a long period of time, this increases into a huge amount and thus increasing your wealth. Let's consider another example for compounding interest and why you should consider investing early. The earlier you invest, the better returns you will receive. Suppose let's consider this one person who invests 1,000 rupees every month at a rate of 12% interest, and he invests for a period of 30 years. At the end of 30 years, he will receive 35 lakhs. That is how compounding works. Now, similarly, if his friend starts investing 20 years later and he invests only for 10 years, but he invests an amount of 10,000 every month for 10 years at the same interest rate. At the end of the same time period as his friend, like after 10 years, he would have earned 23 lakhs, even though he invested 10 times the amount as his friend every month. This is one the main reason why you should start investing right now. Thank you for watching this video. If you like this video, please hit the like button, and if you would like to watch more videos like this, please subscribe to the channel.